to the COVID-19 pandemic. The bank has developed a comprehensive program designed to support customers in coping with and overcoming the financial challenges they face currently and will no doubt face in the months ahead. Tonight's discussion will feature our Chief Operations Officer, Tion Moses, Acting Executive Manager of Retail Banking, Gary Sayers, and Acting Executive Manager of Business Banking, Aaron Logie. At a point during the discussion, we will accommodate questions relating to the discussion through the following channels that are also displayed on your screen. You can call in on 444-COOP or 444-2667, WhatsApp messages only on 410-CARE or 410-2273, and you can also go to our online chat box on our website, www.grenadacoopbank.com. I now turn you over to Mr. Moses, who will give you some context on what will be discussed this evening. Mr. Moses?
Good evening, viewers. As you would well know, COVID-19 has been a major disruptor to the world economy. In stock markets around the world, $5 trillion in value evaporated overnight. In Grenada, we have not been spared. While I don't have the exact number of persons who have been affected, we know for certain that several persons have been laid off. The tourism industry has been particularly hard hit, with many persons being laid off, some on a permanent basis. Given the magnitude of the problem, the financial services industry in Grenada decided to do something to help our customers. We have decided to do a moratorium on loans. So all the customers who have loans with us, we will do this moratorium. We realize, however, that many people don't know what a moratorium is. And at Co-op Bank, we want to help our customers. You may ask, why are we doing this? There are several reasons why we are doing this. One, we are all in it together. If our customers do well, the bank does well. It therefore means that when our customers are not doing well, the bank will not do well. After all, our customers are our families, our friends, our neighbors, so we care about them. Our mission statement speaks to contributing to the well-being of the customers where we operate. So these are some of the reasons why we are doing what we're doing tonight. Earlier in the month, we sent out email notices, letters to our customers. We posted on our website and on social media information relating to this moratorium and asking people to contact the bank to access this moratorium. Tonight, what we're here to do is to articulate, to explain, to simplify what a moratorium really means, to answer your questions as to, is it right for me? How can I access it? What options do I have now? What options will I have at the end of the moratorium period? In essence, what we're doing tonight is giving you information, because we believe that once you have information, then you can make an informed decision. I will ask my colleagues to make some opening statements now, and then we will explain what is a moratorium, and we're going to go into the program proper.
Thank you, Mr. Moses, and good night to our viewers. We have realized that this current crisis has impacted many households' income. In many homes, the main breadwinners have suffered lost or reduced income. We have also seen in some homes where both husbands and wives suffered loss or reduced income. We have seen where parents are depending on their children for a monthly allowance, and one of these children lost his or her income as a result of the lost income. The burden has now fallen on those who are still employed. families who are affected by any of these situations quoted above will worry about the future, and rightfully so. These situations affect persons' ability to service their loans, among other things. We understand these challenges at Co-op Bank, hence the reason why we came up with a flexible program to meet the needs of those who are impacted. At this point, I now turn over to Mr. Evan Logie.
Good night, ladies and gentlemen. So like individuals, businesses are also affected by this pandemic. Many of our businesses that are deemed to be non-essential are closed. Now, this closure means that there's no revenue or cash coming in. However, this very same business have to meet their regular commitments, such as paying loans, paying the utilities, paying their taxes. We know that there are some sectors that are particularly hard hit. The tourism sector stands out, with most hotels literally empty. St. George University, which by some estimates contribute up to 20% of the total income in Grenada, is also closed. Hence, businesses that provide support services such as accommodation, vehicle rental to students are feeling the brunt of the COVID. Therefore, as a bank, Co-op Bank, we are here to help businesses navigate such a difficult period by what we are offering by way of moratorium.
So we want to answer the question, what is a moratorium? And I know it is a big word. The root is in Latin, of course. It goes back to the root mora. And mora simply means a deferral, a postponement. It means delay. In the financial context, therefore, a moratorium means delaying your payment, postponing your payment. It means you not having to pay your loan for the length of the period given. A moratorium is not somebody just deciding I am not paying my loan. It is an agreement made with your financial institution that this loan will not be paid. So in the first instance, we are doing a 6-month moratorium, a 6-month deferral of payment, a period of 6 months when you don't have to pay your loan. But there are different options that are being offered. And for that, I want to have Mr. Sayers explain what those options are.
Okay, thank you, Mr. Moses. There are 3 options, of course, and the first option I will explain is one where no payment is made to the loan. So someone has a loan of $400,000. That person pays, say, $2,800 per month. That $2,800 is suspended for the moratorium period, right? So no principal, no interest is paid. However, accrued interest will be added, interest continue to accrue. And at the end of the moratorium period, that interest will be added onto the principal, or what to say, capitalized, and a new payment structure will be given. Then you have where you pay interest only. Again, someone may opt for the interest because they may have a reduced income or some means of paying the interest, right? Now, it means then at the end of the moratorium period, there will be no capitalization of interest, except that the loan will be restructured with only principal because you were paying interest already, so there is nothing to capitalize. And then you have the payment to principal only. In such situation, someone may have a payment of, say, $2,800, and the monthly interest might be approximately $1,800. But that individual says, I cannot pay $1,800, I can pay $1,400, I can pay $1,000. Because interest will not be covered in 1 month or in any month, we will offer you payment to principal only. So what happens? That $1,400 will reflect in the principal payment. So at the end of every month, it will reduce by $1,400. However, the interest will continue to accrue. And at the end of the moratorium period, that said interest will be added to the principal, or capitalized as we say, and the loan will be restructured, and a new payment structure and so on will be given to you. Thank you.
So the options are clearly outlined to you. If you lost all your income, you can decide that you want the full moratorium, meaning you have nothing to pay back until the end of the moratorium period. Some persons may still have some income, maybe 85% of their income, 50% of their income, and it will be in their interest to pay maybe some of the interest, because a moratorium means a deferral, meaning that while I don't have to pay it now, I will have to pay it in the future. Not only that, the accrued interest will be added onto the loan at the end of the moratorium period. So if you could pay that and not have it accrue, then you will be better off at the end of the moratorium period. So the options are quite clear, and what you would want to find out is what would be the best option for me. You can determine that by speaking to your loans officer, given that you know your situation as to whether you still have some income or whether you have no income at all. So once you explain your situation to the officer, then we can make an informed decision.
We have one question from WhatsApp. When you say capitalization, what do you mean?
I mean that the interest that accrued during the moratorium period will be added on to the principal, because you may recall that you were not paying on the principal, so but you are not paying on the interest, sorry, but the principal remains the same. Now, at the end of the period, what we'll do, we'll add that interest back to the principal. That's what we call capitalization. And that you'll get a new loan amount, and the payment structure will be based on that new loan amount.
So for like any given loan, interest will be charged. Now that you don't have an income, it means that interest still will be running on the loan, so to speak. It will still be added into the loan. So at the end of the period, that interest is still payable. And what Mr. Sayers is saying is that interest is added onto the loan at the end, because at that point you are probably just going to resume work, hopefully, and so you will not be able to pay off what was accrued all at once. So we may have to add that back to the loan to give you a more comfortable payment. So that is what that big word capitalization means, an adding back of the interest onto the loan.
Okay, do you want to take some questions? Okay, so caller, listeners and viewers, we're going to open the line. The number is 444-2667. Also send your questions in via WhatsApp if you want to, 410-2273. Okay, in the meantime, let me ask a question that we've received. Does the moratorium or loan payment deferral apply to a loan that may be in arrears?
Yes. As long as you would have been affected by COVID-19, you are eligible for this program. So even if you were, let's say, 1 month in arrears, 2 months in arrears maybe, then you can still qualify for this delayed payment. What you would want to do is to contact us, speak to your loans officer about the moratorium. and then you can have easy access to it.
Thank you.
In fact, many of the accounts we are seeing right now are already in arrears because some persons didn't receive salary at the entire salary at the end of March, or some persons didn't receive salary at all. So in those situations, we have seen that these loans are already in arrears, so therefore they are qualified for the moratorium.
Okay. Are there any charges for applying for a loan postponement is another question that we've had.
There are no charges. All fees by the bank have been waived for the moratorium period. There are some situations that can possibly occur if a loan is sufficiently large and at the end of the moratorium period, so much interest would have accrued that the exposure to the financial institution is considered to be much greater than what it was at the initial stages of the loan. There may be the possibility that the mortgage may have to be increased. So the charge on the mortgage may have to be increased. If that happens, then the legal fees will be for the customer. But as it relates to bank fees, there will be no charges to the customer at all.
Okay, we have two more questions via WhatsApp. The first one is, do I have to call or come in to get it, or is it automatically put to the loan?
Yes, you have to apply for it, because we are only giving to persons, as we say, who have been affected, whose salaries have been affected. So there's a letter, a form that we will ask the customer to sign, and he or she can come into us. We have emailed many of these letters. If an individual who has a loan and is qualified for that moratorium, if the individual didn't or hasn't received that email, they can indicate to us, they can come in, or they can ask us to send another email to them, and they can access it.
And the reason why it is not across the board is because some people are not affected at all. So you may have a situation in a household, for example, where both husband and wife work with government, and so they still have an income, and so they may not want the moratorium. The banks have also learned from the period after Ivan, when several persons would have been given a moratorium across the board, and then 10, 15 years later on, came into the bank to say that they didn't ask for it. So we want to make sure that people, one, understand what it is, understand what it means for them, and we want to make sure that they apply for it. And when we say apply, we don't mean filling out any big set of forms. We just mean saying, yes, I want it. And so in sending out the information to customers, all we ask them to do is to say yes, sign on the dotted line, yes, I want the moratorium, and then they have easy access to it.
Just to add, we have seen in last few days where a couple of customers called to say that they do not want the moratorium because probably other institutions may be offering to all the customers. So they're thinking they're offering to all the customers as well. So some of those persons who know, who understand the implications, the impact of the moratorium, what it can do to your loan balance and so on, some of them have called to say that they do not want it, and of course we respect that, and we're happy that they understand it, because the moratorium will not benefit them if they can afford to pay. It just means that they will be paying more interest for a longer period of time and probably higher monthly payments as well. So.
Okay, we have a caller on the line. Good evening, caller. Go ahead with your question. Good evening, caller. Are you there?
Yeah, I'm there.
Okay,
Good
go ahead
evening.
with your question.
Okay, my question is, with the rate of interest during the moratorium, if somebody seeks to take a moratorium from Coop Bank, would the rate of interest be the same as the normal rate of interest, or would there be a reduction in the rate of interest during the moratorium, since this is a crisis period? Thank you.
Caller, thank you for your question. The rate of interest would remain the same. You have to remember that we still have to pay depositors on the funds that we have lent out, and we not receive any reduction in deposit rates as guided by central bank, so we have to continue charging the interest.
Okay,
In addition to that, the interest charge on a loan reflects the risk of the loan. Really and truly, during this crisis, the risk to all financial institutions has really gone up. But given the situation, we cannot increase the rates to reflect that risk, given that it's a crisis. So the rates will remain the same, rather than be increased to reflect increased risk in the system.
Okay, we spoke about the interest payment deferral. We have a question that asks about the second option, which is the principal payment deferral. Someone wants to, for us to explain what is the second option in the loan moratorium. We spoke about the interest payment deferrals. What about the principal?
Well, call it the second option of the principal deferral. So the first option, you have a full moratorium where you do not pay any interest or principal. Option number 2 and 3, you have the option of either paying interest only or you pay principal only. Depending on your circumstances, your situation, if your cash flow, if you still have the cash flows and you could afford to pay part of the loan rather than the full, rather than taking the full moratorium, such that at the end of the moratorium period, the burden will not be too great from the standpoint of the amount of interest to be capitalized. So you have the option, you can pay the principal every month, which is basically like a part payment, or just the interest only.
So, if I could add, if you pay interest only, then interest does not accumulate on a loan. What then happens if I pay principal only? Here is what happens. If you pay the principal, it means the loan balance, principal balance is going down, and interest is payable on the principal balance. So if principal balance is going down, then it means your interest, the interest that you pay, is actually being reduced. So that would be the advantage of paying principal only versus paying interest only.
Okay. We have a question here on a Facebook page. If you do not choose to accept the moratorium at this point and for the next 6 months, is it going to be accessible after the 6-month period?
That question is a pertinent one, but it takes us into the realm of the unknown, simply because we don't know how this pandemic is going to play out. We know and we already understand that this crisis is probably going to be very, very much worse than what happened in 2008. But when you look at what's happening in the major economies of the world, 24 million people being unemployed in the US and so on, and we know what happens, there's this trickle-down effect from the major economies in the world. We know, we always say that if the US sneezes, we catch the cold. So we don't know when the recovery is going to start. We don't know when planes are going to start flying again, for example. There's so much unknowns, and that is why, with the agreement of the ECCB, we said we would do the moratorium for a 6-month period in the first instance, meaning that we will be prepared to extend it, maybe up to 1 year, 18 months, 2 years, who knows, if needs be. So we really don't know, caller, when it is going to end, but it is for a 6-month period in the first instance, and that can be easily extended.
Okay, here's a good question. Can the deferral of loans be done without the capitalization of interest?
The deferral of loan without the capitalization of interest. Now, if you defer the payment, obviously the interest will continue accruing. If you want to avoid the interest from being capitalized, one of the options is that every month you can make the interest payment. As a result, if you do make the interest payment every month, at the end of the moratorium period, there will be no interest to capitalize.
Thank you.
Or alternatively, the accrued interest, one can take a loan at 0% interest rate, and that loan will be paid separate to the existing loan. So yes, they can avoid, we can avoid capitalizing it, but of course the person has to pay it some way or the other.
All right. So it is up to the customers whether they want to take this moratorium or not. Somebody wanted to know whether it is their choice to pause or not to pause their loan payments. Just reiterate on that for us.
It would only be optional to them if they have income. If I am out of a job and I have absolutely no means of paying the loan, then I don't have a choice. I cannot pay. So I would approach my bank and say, please, can I have this moratorium? If I have the means to pay, then I have an option. And the question I would want to ask myself is, will it then be beneficial for me not to pay? Or would I be in a better position if I pay? And each individual will have to answer that question. I like to think of interest on a loan as a rent for money. So if I can give an example, if I rent a house for $1,000 a month and I rent for 1 year, I pay $12,000 in rent. That's simple math. But if I rent for 10 years, then I pay about $120,000 in rent. That's a lot. So the longer I rent, the more rent I pay. It's the same thing with money. The longer I keep the money for, then the more interest I have to pay, because interest is rent that I'm paying on the money. So I would want to think about these options in making my decision to pay the loan. If also I have a mortgage, one of the things person should think about is, how soon would I retire? And it should be in everybody's plan to try and repay that mortgage before retirement age arrives. Now, one of the things loan deferral can do is to lengthen the term of your loan. And you don't want to be retired and still have a mortgage to pay. So these are the things I would want to consider in making that decision. If I have income, my personal decision will be to pay the loan.
Okay, we have a caller on the line. Good evening, caller. You're on the air. Go ahead with your question.
Yes, I saw you have is a loan payment postponement right from me. I would like to know what is involved in the postponement. Will it be the principal and interest, or just the principal? I mean, for how long? I looked up moratorium, and I realized it is the postponement of the principal, but the interest has to be paid. I mean, I would like to find out why is it the postponement will be on both principal and interest. Because, I mean, we don't know how long this will be for. I mean, this is an undetermined thing, so we're just hoping for the best. So I just wanted to find out. Thank you.
Thank you, caller.
Yes, caller. Maybe you tuned in a little bit late because we spoke about 3 different options. One option is you don't pay anything at all. You pay neither principal nor interest. Option 2 is you have some income. You can afford to pay the interest only. You can pay that during the period. Option 3 will be I have some income. I pay principal only and I don't pay the interest. So you have a choice once you have some level of income. And we said if you have no income at all, then you can you pay no interest, no principal whatsoever. So you have 3 choices that you can choose to exercise for the entire length of the moratorium period.
Okay, we have another caller online. Good evening, caller. You're live on the air. Go ahead with your question.
Yes, good evening. Good evening. I'm speaking from Brooklyn, New York, actually. And my reason for calling actually is to compliment you, the other 2 gentlemen, and Mr. Grant on the information you all are bringing to the people. I think it's a very, very, very important topic there. So this is the reason I'm calling. But I personally don't have, no kind of thing about the mortgage business. But they just, I think that's very, very nice. That's my compliment to you all guys. And I thank you very much for doing that on behalf of the people of Grenada. Okay? Are you there?
Thank you, caller. We are glad that
So all the best to you all guys. Thank you very much. Bye.
Thank you, caller. We are glad that the diaspora is tuning in. And we hope that you guys stay well, avoid the COVID, because you're an integral part of the economy here in Grenada, we understand. Thank you very much.
All right, I'm glad you spoke about the retirement, the person that was close to retirement, paying back a loan, that before retirement, because somebody has a question here. If someone requests a moratorium and they're close to retirement, but based on the person's ability to pay back, there is a possibility the loan may go over the retirement age and that person will have no income, etc. What will happen in that case?
It's a very, very important question because, as I alluded to, persons should try to pay off all loans prior to retirement. And that is because, especially when we're talking about a mortgage represents a major commitment. It usually takes up a sizable portion of your income. After retirement, one loses a portion of the income, sometimes up to 60% of the income. I would hope that in the caller's case that the reduction is not so severe. In other words, they have a decent enough pension. And you want to ensure that when the pension kicks in, you don't have that big obligation, or if you have an obligation at all, it is commensurately reduced to fit into your new reduced income, which is the pension. If at the end of your working life, because of the moratorium, you still have some balance left over, what the institution can do is to then stretch out that loan over a longer period of time so that your monthly payment can be reduced to fit into the reduced pension. So there are still things that Co-op Bank can do to help you if, when you get to retirement, you still have a loan on the books. We know, for example, in the developed countries, mortgages run sometimes up to 50 years, way past retirement age for most persons, and banks still lend money because as parents, you want to make sure that you leave things for your children, and unfortunately in these larger countries, property values are so high that they leave the property, but they leave a loan balance also. You want to avoid that. You want to plan well. You want to make sure that by the time you get to retirement, your mortgage is paid off.
Okay. We have another caller. Good evening, caller. You're on the air. Please go ahead.
Good evening. Yes. I have one question or one statement to make. My household may not be affected salary-wise. However, automatically because of the crisis, I now have dependencies due to the crisis. How would I be treated if I ask to come in to do a loan transaction in that aspect? Well, not a loan, but to make some changes to my loan payments.
Okay, so you're speaking about probably changing the amount you pay every month? Or
Okay.
are you speaking about the postponement of your loan payments?
No, not postponement, sorry. I'm speaking about the three options that you gave. Sorry, I think I said it wrong.
Okay.
The three options that you gave as it relates to the second point, I think you said that you can only pay the interest and don't pay on the...
Okay, on the
yeah.
principal.
Principal, yes.
Okay, no problem. Thank you, caller.
You're welcome.
Caller, if I understand you well, there may be households where the main income earner, for example, may still have a salary, but some other person in the household who used to pay maybe one or two bills, maybe light bill or something else, lost their job. Then it means that while you are not affected, the household is affected by COVID. And it means now that you would have to divert some income that normally would go to maybe buying food, doing some other things, to upkeeping the rest of the household. We consider that to be that your household is also affected, and that qualifies you for this moratorium. So once your household income has been affected, that qualifies you. I think that is the way you were going with that question, if I got it right.
Okay, thank you so much. So let's go back to WhatsApp. We have this question. If someone chose the moratorium on both principal and interest payments for 6 months, but was able to make some sort of payments, full or partial, during the moratorium period, how will those payments be applied?
Now the payments, the customer has a choice in terms of when making the payments during the moratorium. So if by some chance the customer got income during that period of time, on making the payments, you can decide or ask that the payments be applied against the principal, or it can be applied against the interest, or it could be a combined payment when the payment is taken against both principal and interest. So we'll observe the moratorium in the 6 months, and we'll encourage customers, if ever they do come across or get income during a period of time, to make payments. Because when you do that, at the end of the day, At the end of the moratorium period, you're reducing the amount of interest that will be capitalized. And as Mr. Mose indicated, especially if your mortgage will be going close to your retirement age, you want to minimize that in terms of your mortgage expiring after your retirement age. So if you do get additional income during the moratorium period, make good use of it and make some payments. We will accept it. Will not penalize the customer for making payments during that period.
Let me also add that at any time during the moratorium period, if a customer regains employment and wishes to end the moratorium, he or she can do that at any time during the 6-month period or during the moratorium period. So
then that answers the question, can I pay off the interest accumulated after the 6-month moratorium over the counter? They can pay it back at any time.
Yes, you can.
Mm-hmm. Okay, we have another call on the line. Good evening, caller. Go ahead with your question.
Yeah, good evening. My question tonight is, let's suppose that the husband lives in Grenada and the wife lives in the U.S. The husband still has his salary because he has not lost his job. However, the wife who lives in the U.S. would have lost her job. Would option 2 be a wise choice?
Thank you, caller.
You're welcome.
Yes, it depends on the family's ability to pay the interest, right? Option 2 refers to payment of interest only. So it depends on the family's ability to service the interest. If they can, yes, it's okay to do that. And even if in paying the interest, let's say, for example, at the end of the month, the interest payment comes up to $2,000, and that person can pay $3,000. They can pay the $2,000 to the interest, and the difference of $1,000 can go to the principal. So there's nothing that stops anyone from making payment to the loan.
Okay, that was a good question.
Well, the beauty of the whole program that we are offering at Co-op Bank is that we are very flexible in accommodating our customers in this time. So we will not penalize you if you take one option and you'll want to change or make payments during the period. We are a Grenadian bank, we are a family bank, and we understand our customers, and we are prepared to meet our customers where they are.
There's a question on WhatsApp that I thought was quite interesting. Though essential workers have not lost income, would a moratorium still be considered for them, given that there may be added expenses at this time?
And the answer is yes. Once the household is affected in any way, then we will make the moratorium available to frontline workers.
Okay, do you want to accommodate more questions, or would you like to continue with the discussion? We can accommodate more. Okay. Somebody's asking if there's a deadline to apply.
Good question. As it is now, the moratorium period is for a period of 6 months. However, somebody may be able to pay from the savings for 6 months, up to 5 or 6 months. On the 7th month, that person may not regain a job, but that savings may have been diminished to the point where they can't afford to pay. So in such a situation, yes, we are going to offer the moratorium.
Okay, and another question.
Well, following up to what Mr. CS says, Mr. Moses indicated earlier that the period that we are going through, the economic period, is very uncertain. So we are not sure that at the end of September or January next year that we are still in a economic crisis that is following the health crisis. So we do not have a strict deadline as to the application of moratorium. At the end of 6 months, we'll reassess. And if our customers are still under stress in terms of ability to pay the loan, we would consider applications then.
The moratorium period is for 6 months. If you wait until 6 months to apply, the period has expired. So the time to apply is now. So there is no deadline for application, but once you're affected, you want to apply immediately to maximize on the time period that is being offered. That would be my take on it.
Okay. Can the term of my loan be extended by the 6 months given in the moratorium rather than have my payments increase?
Well, at the end of the moratorium period, we want to say we'll restructure the loan, and we look at several options, and we'll sit with the customer and determine what's the best option for the customer based on their circumstances. Now, as Mr. Mose indicated earlier, if you're close to retirement age, it will be inadvisable to stretch a loan beyond that. So if at the end of the moratorium period and you have sufficient income to accommodate, one of the options that could be considered is increasing the monthly amounts so that the loan can end in the period that was agreed on before. However, that may not be possible for some persons based on income level. And if they are a little away from retirement age in terms of when the mortgage would have initially matured, then we can consider extending the period and keeping the monthly payment same. For each customer, it will be depend on their individual circumstances, and we'll tailor the solution to that situation.
I would add that it sometimes sounds kind of logical that if I didn't pay for 6 months, then 6 months is going to be added onto my loan. But logic sometimes don't apply when it comes to loans because of this thing called interest. What do I mean by that? There are cases where if I get a deferral of 6 months, eventually my loan may be extended by 2 or 3 years as a result. It all depends on the size of the loan, it depends on the interest rate, and it depends on how long the moratorium period ran. So maybe I can give an example. If you have a loan for $400,000, let's say, and your interest rate is high, let's say 8%, and it's a 20-year mortgage, then your monthly payment on that loan may be about $3,400. If you then take the moratorium for 6 months, in that 6-month period, approximately $16,000 in interest would accrue. Now, at the end of the moratorium period, that $16,000 has to now be added onto the loan. It means that your monthly payment will go up by $160. But the caller said, can I not increase my monthly payment? Well, for that to happen, you then have to extend the loan. But if you extend the loan to keep the payment at the same amount, you would find that you would have to extend the loan by 2 years to keep the loan payment at the same amount that it is. And that is why one should carefully consider taking a moratorium if in fact they have the ability to service the loan, because the extension in the term may not be so commensurate with the moratorium period, if you understand what I'm saying. So for me, the decision to take the moratorium or not if I have income, is straightforward. But someone might be still tempted to take the moratorium. The question that will come to mind is, why do I want it? Why do I want some extra money in my hand? Because that's what it amounts to. If I can pay, but I want a moratorium, it means I have some other plan for the money. That plan has to be, to me, something so important that it is a must-do for me. Even then, I probably still would not take the moratorium. It might be in my interest to go into the bank to get an additional loan, a side loan, a small loan. So if in the example I just gave, all I would save is $16,000 in interest, and if I took principal also, maybe $20,400 in total, it might make more sense for me to go into the bank and take a loan for $20,400. That loan may be over a, let's say, 5-year period. It's still comfortable for me, rather than repaying it over a 20-year period. Remember what I said, interest is rent on money. If I'm going to rent it for 20 years versus 5 years, the 5-year option will always be better for me. So I would want to take all these things into consideration before I make that decision to take the moratorium.
Okay, another question. At the end of the moratorium period, would there be any fees or charges associated with the restructuring of the loan? I think that's a very good question.
Yes, at the end of the period, there will be no charges, no fees, I should say, loan fees. However, if there is any legal fees to be charged, that will be borne by the customer. And I say legal fees, Mr. Moses spoke earlier about covering the mortgage, covering the excess, the mortgage. So if, for example, the stamping or the loan coverage, legal coverage is $400,000, and the interest, accrued interest and capitalization takes it above the $400,000, then the customer will have to bone the cost of that legal fees. Have to bear the cost, sorry.
I would hasten to add that for most persons, that would not be the case. 6 months is not a very long time. And for most persons, if they had their loan for a few years, let's say, then the matter of coverage by the mortgage would not apply at all. And in any event, even if the loan goes up to a little bit more than the mortgage, the bank may not want to put the customer through an upstamping of the mortgage, because it would consider the exposure to be not so great. So for most persons, legal fees would not apply. And as Gary said, there will be no loan fees at the end of the moratorium. No loan fees whatsoever.
Okay, we appreciate all the questions coming in through WhatsApp. We have quite a lot. One question that I thought was quite interesting. Given the likelihood that loan rates may drop further with a decrease in the economy, would this be reflective after a 6-month moratorium?
Thanks, caller, for that question. In Core Bank, we price loan based on risk. And every year we review a loan. We review the risks that it poses to the bank. And if the risk has decreased, we will consider reducing the rates. Now, where we stand, we are not sure as to what direction rates will be going in the market. You know, that depends on market forces, demand and supply. And of course, if the supply factors cause a decrease, or the demand factors low and cause a decrease in the market rate, well, obviously, as a competitor in the market, we will our rates will will take that trend. But we cannot say where we sit now that there will be a decrease in the interest rates, say 6 months from now. A lot depends on market forces.
I might add that rates are now the lowest they've ever been in Grenada. When I started banking many years ago, a preferred customer, a preferred mortgage customer got a rate of 12.5%. If you were not preferred, that could be 14.5%, 15.5%. Now you see where the rates have gone. And there is still a cost to doing business, still a cost to doing banking, still a mandatory cost that banks must bear of the mandatory savings rate. So while Mr. Logie is saying that we are not prophets and we don't know what would happen in the future, it is not very conceivable that the rates could go very, very much lower. Not impossible, but just not conceivable at this point in time.
Okay. So if someone has a significant savings balance at the bank, but they lost their source of income, are they able to still qualify for the moratorium?
Yes, to qualify for the moratorium has nothing to do with the savings in your account. It has to do with your income. So once you suffered loss or reduced income, then you can qualify for the facility, for the moratorium.
Okay. We have a question on Facebook. What happens after the bank, in its view, has exhausted all forms of assistance to an employee who is furloughed or without a steady income due to the current economic situation?
I am not sure I understood the question. The question is saying that the bank exhausted all options?
Yes, so if we gave them all the assistance that we could have given them, if they're furloughed, I suppose after the 6 months or 18 months or so, what would we do?
Remember we said that we don't know how long this crisis will go, and that the moratorium is for 6 months in the first instance. It is therefore conceivable that the crisis may be prolonged. And like I said up front, the bank is willing to extend based on how fast the economy recovers. If, let's say, the economy is recovering, but for one particular individual, they laid off, they just can't seem to find alternative employment, then the bank will work with that person as an individual. Presumably, they are marketable, they have some skill, some qualification that would enable them to get a job, and the bank will be patient given the crisis to ensure that that person gets back on their feet. So what we want to do is to help people to get back on their feet. Remember what I said about a mission is to contribute to the well-being of people, customers where we operate. So it is to give forbearance to that customer. And there have been circumstances in the past where we gave forbearance for a relatively long period of time.
Thank you, Mr. Moses. All right, we have a call on the line. Good evening, caller. Go ahead with your question.
Hi, good evening. Can you refinance your loan if you apply for the moratorium?
Can you repeat the question, caller? Okay. I think he was asking about refinancing the loan.
Well, that is what the moratorium is all about, is to give you forbearance so that you don't have to pay anything. But at the end of the moratorium period, what we want to do is to repackage that loan in a manner that you could afford. So like I said, at the end of the period, hopefully you have regained your income, and the whole idea now is to restructure the loan in a manner that now meets the customer's needs. So the answer, if I got the question right, is yes.
Thank you. Why is the moratorium by way of a request by the customer as opposed to applying it across the board to everyone? I think that's one of the questions that we've gotten a lot over the past couple weeks.
Right, and I mentioned in my introduction that we learned a lot from the past. After Ivan, some institutions gave the moratorium across the board, and later on many customers said, I never asked for this, I never wanted it. The second reason is that many persons still have their income intact. They didn't lose income at all, and so they can afford to pay the loan. We are saying we don't want to do an across the board and then people just didn't want it, they were not interested, they wanted to pay their loan. So just indicate to us and say, help, I need some help, and it is made available to you immediately. We just saying we want you to indicate so that we don't have situations where many people frown on it and say, I didn't want it. A moratorium will mean a restructuring at the end of the period, and we believe that customers should then sign for that restructuring, because restructure means new terms and conditions, new repayment, new maturity date and everything, and we want to ensure that people know exactly what is going on with their loan. We don't want to do things and keep the customer in the dark, so to speak.
But I just want to add here that as a local bank, what we want to do is offer what's the best interest for the customer. And a moratorium may not necessarily be the best thing for a particular customer based on the circumstances. Because if you do not lose your income, why defer the payment? Because at the end of the day, you still have to make those payments. The payments don't go away. You have more interest to pay. And it means that at the end of the day, your loan will take a longer time to pay, and you have to pay more. So if you don't lose your income and you could afford to pay a loan, as a responsible corporate citizen, we would want you to pay a loan. However, we understand the period that we are in, that people are lost their income, people are distressed, and we are ready to help customers. But don't take it if you don't need it, because you still have to commit to pay that loan.
Okay, we'll take another call. Good evening, caller. Go ahead with your question.
I got a question. Okay, if one has a loan with you, all right, with the bank, at the end of the payment of the loan, is there a transfer fee?
Sorry, caller, is there a transfer fee?
Yes. Okay, normally when you, as a vehicle, if you purchase a vehicle from somebody, you normally have to get pay a transfer fee to the government. Is that applied to the bank also? Like, I paid my mortgage, and at the end of my payment to you, do I have to pay an additional transfer fee that will come over to me?
There is no fee at the end of the loan payment. What I think you're referring to is the reconveyance of the mortgage document. Now, when someone mortgages his or her property to the bank, there is a cost to mortgage as well. So you're the mortgager, the bank, you're the mortgager, and the bank is the mortgagee, right? Now, at the end of the payment, to get back the property in your hand or to release it from the bank, you have to pay what we refer to as a fee, so what we call a reconveyance fee. That fee is stamp duty and payment to the attorney for their services.
If I got the customer clear, because I'm not sure I did, no fees are applicable for the moratorium. We established that already. So if you came and you paid off at the end of the moratorium period, there are no fees. But if what the column meant was what Gary just spoke to, let's say when you finish paying a mortgage, then that is different. Because what actually happens when a customer does a mortgage, most people don't realize the title to the property is actually transferred to the bank. That is what a mortgage is. Title moves from John Public to the bank. The bank now essentially owns the property. When the loan is finished paid, the bank still owns the property. To get that back, you have to now transfer the title from the bank back to the customer. Most people don't do that for years. Sometimes they leave the documents in the bank and so on. They forgot that they mortgaged it to the bank or whatever. At the end of the mortgage, what should happen is the property should be reconveyed to you because you're no longer owe. It's now yours. It's free. It's unencumbered. You have to do what is called the reconveyance, as Gary said, and for that, there is a fee that lawyers charge to do that. That fee is for the customer.
Okay, so here we're going to just take like a minute or a short break, and we'll get back to you in just a little while. viewers and listeners to our live webinar. Is a loan payment postponement right for me? Remember to call with your questions 444-2667 or 410-CARE or 410-2273 with your WhatsApp questions. Also, don't forget we have a chat room on our website, www.grenadacoopbank.com. You can put your questions there as well. So we are now going to ask one more question that we had on WhatsApp. Can I switch which type of moratorium I agreed to before it ends? For example, I started with the payment on principal and now I want to switch to the payment on interest.
Is very flexible. As we said, during the moratorium period, some persons' circumstances will change. So, for example, you might take a full moratorium where you're not paying both interest and principal. But let's say your income increased during that period of time. You may not go back to the full amount, but you can afford to pay a part. So yes, you can switch. Instead of the full moratorium, you could switch and pay the principal only or the interest. However, we like to have it orderly, so we don't not want to have 1 month one option, next month another option. But we are prepared to work with each and every customer based on their circumstances.
Thank you, Mr. Logie. Okay, somebody wants to for us to explain again the terms principal and loan deferral.
Principal and loan deferral.
Yes, those two terms.
Okay. So the deferral is a period of time that the bank is offering of 6 months when you don't have to pay your loan at all. But we give you options. You could choose not to pay interest and principal, or not to pay interest, or not to pay principal. The option is yours if you have some form of income. What is principal? Principal is the money that you actually borrowed. So if I borrowed $100,000, that is the principal amount that I borrowed. Interest is charged on that principal. So my interest might be 6%. When my loan goes down to, say, $70,000, I get charged only on $70,000 because 70 is now my principal. So think of principal as the amount you borrowed and the amount you are owing at any one point in time if your loan is up to date. Think about it in that term, and you'll be on the right track.
Okay, we have another caller on the line. Good evening, caller. Welcome. Go ahead with your question.
Good afternoon, my dear. I have a question.
Go ahead.
The question is, why it is that when you take a mortgage out, right, at the beginning of the mortgage, you have to pay the lawyer fees, right? When you finish paying that mortgage, to me, I think it's unfair that you as the customer still have to pay that reconveyance fee. I think that should be the bank's charge and not the customer's charge, because you would have already paid the first set of legal fees up front.
Okay, that's all the question? Okay.
Okay, thank you, caller, for that call. Remember that the lawyers are there to facilitate transactions between the customer and the bank. and the lawyer is totally independent of the bank. So that when work is done on behalf of the customer, the lawyers charge fees, and those fees are always for the customer. So I explained before that a mortgage, you're actually conveying the property to the bank. The lawyer has to do that for you. At the end of the loan, the lawyer has to reconvey the property to you, the customer. So the lawyer is in fact working for you, the customer, in reconveying back to you. And that is why the cost is for the customer. It is the lawyer facilitating transfer of title back to the customer. I think that's the best way I can explain it.
But the customer also has to realize it's in the customer interest to transfer the title from the bank back to you, such that in the future, whatever you want to do with the property, whether you want to will it away, whether you want to sell it, it is in your name, and the bank cannot stop you thereafter since you paid, you made all the payments on the loan. So it's in your interest and your benefit.
Okay. So if back to the moratorium questions, if a customer has more than one loan, can they obtain a loan payment postponement on all the loans?
Yes, that's quite possible. Again, let's look at the reason for which the moratorium is given. And if the customer has 2 or 3 loans and he or she is unable to pay any of them, then of course you are qualified for the moratorium. Of course, you may not take the entire principal and interest. You may take interest only or payment to the principal only. But of course, yes, because of the circumstances, you will be able to get a moratorium on each of them.
But the customer could also choose to accept the moratorium on some. Like you have 3 loans, you could take it on 2 and continue paying on 1 loan. It's entirely up to you. As a bank, we are very flexible in meeting your needs. So the decision rests a lot with you as a customer and what you want.
Okay. I'm seeing this question a little bit more often tonight. Does the moratorium have any effect on new loan applications? Will that impact the applications that we receive from customers who now want to apply for credit?
No, not at all. We are a bank and we are in the business of lending, and so we welcome all and sundry to make the applications.
I would think that that is a strange scenario being painted, though. If you are affected to the point where you can't pay, and you walk into the bank and say, I need a new loan, if it has nothing to do with the existing loan, then the question that would pop into my mind is, well, if you can't pay the existing, how are you going to pay the new? So if by new the customer means a refinance, a restructure, a brand new loan to take me out of the situation that I'm in, then of course yes. But if you took the moratorium meaning that I have some issues, I am having difficulties paying, then the question I have in my mind is, how could you in the same breath say, I need to borrow more money?
But so I suppose persons who are not affected, the income has not been lost, they're still living normally, but they would like to get a loan for borrowing.
Mean new loans
they could come
to the bank in general?
Yes.
Oh, yeah. As Logie said, we are open for business. And we know that many people are not affected. They have their full income and so on. Government employees would be an example. Then we in the business of lending.
Even for persons affected, particularly businesses, we are prepared to help by way of temporary overdraft facilities. So once you have been a good customer, a good business customer, and we know you, we know the risk that's affecting you. We are prepared to provide, as part of the offer on the moratorium, to offer temporary increases in your overdraft facility by way, essentially, as a new loan.
Okay, thank you. We have another caller on the line. Good evening, caller. Welcome to the program. Go ahead with your question.
Hi, good evening. We were speaking in terms of fees earlier on. You were saying that there will be no fees at the end of the moratorium. But if you have a loan covered by a bill of sale and it runs beyond the expiry date, you will be expected to do a new bill of sale, and that will incur legal fees. So I'm just trying to clarify this, because you said there will be no fees. But if the loan runs, a bill of sale loan runs beyond the expiry date, because a bill of sale is specific and it runs beyond the expiry, we're expected to do a new bill of sale, which will incur legal fees.
Thank you. Thank you, caller.
Yes, you're right. We speak about no bank fees. So money coming to the bank as income, we will not be charging this. But for the bill of sale speaks to stamp duty to the government of Grenada. So this will be charged, and that will be borne by the customer.
Okay, thank you. We don't have any further questions for the time being, so we can continue with the discussion. What about businesses who may have been affected? Do they fall under that the two same options of interest payments and principal payments also?
Well, the moratorium that we are offering for all our customers, whether it's individual or business. So as a business, like individuals, businesses, especially those that are considered to be non-essential, that are closed, obviously they do not have income. And as a result, they also qualify for the moratorium that we are offering. And I just indicated earlier, some businesses, even though their income would have decreased, their cash flows, inflows, they continue to have expenses. And we are mindful of that, and we are prepared to help under the whole program by way of temporary increases in overdraft to facilitate some of those expenses that they continue to have while we are under the lockdown. So yes, the moratorium open to all our business customers as well as individuals.
For the night, we haven't spoken about credit card customers. Credit card customers are concerned. They want to know whether they are eligible for any payment deferrals as well. If yes, will interest payments be deferred also?
Yes, at this time, what we have secured so far is the waiver of late fees until the end of July. So for the next, between now and July, there will be no late fees charged on accounts. However, in terms of deferral of payments, we were not able to secure that yet. So at this time, we can safely say that the waiver, that there's a waiver on late payment, but not a deferral on credit card payments at this time.
Well, I just want to add here, as a responsible local institution, we will not want to encourage persons to seek, what you might say, a moratorium on their credit cards. Now, credit card interest rate is extremely high compared to regular loans. So, for example, if you have a balance of about $10,000 on your credit card and you're unable to pay that amount, it might be advisable if you ask your financial institution apply for a loan to cover the credit card, pay the loan at a much lower interest rate. Because once you defer credit card payment of, say, $10,000, in about a year time, if the interest rate is in excess of, say, 15%, in a short period of time, that balance will almost double. So with a credit card, it's a little unique from a regular loan because of the rate of interest that usually charged on it. So one has to be very mindful of taking the waiver. Do it if you really have to, but if you don't, and you can make by making at least a minimum payment, that might be advisable.
Okay. What information do customers need to provide in order to get a loan payment postponement?
Well, of course, there are certain industries that are badly hit by the pandemic. So we know the hotel industry, restaurants, barbershops, and so on. These people who are employed in these industries are home. So in situations like these, all they need to do is to sign, come into the bank, or as I said earlier, we emailed persons, and those persons can sign and bring in the offer letter that we sent to them, or they can email it to us. So those persons definitely are already qualified. But in situations where persons or a person hasn't lost his or her income, then we want to know, why do you want the moratorium? It may well be that someone in the household lost income. As a result of that, it's a lot of burden, it's more burden on that individual. So in such a situation, yes, they can qualify for the moratorium.
So essentially, as a follow-up to Mr. Sears, you really don't have to provide anything for the moratorium. As a bank, we know our customers and we know the sectors that are affected, and on that basis, we are prepared to deal with our customers.
And might I also add that there was an email address provided. It is on our Facebook page for people who may have been affected by the current crisis and want to apply for this loan payment postponement. So you can always check on our Facebook page, covidcare@grenadacoopbank.com. Okay, so we have another question. We'll have to reiterate this one. If you are paying interest only during the moratorium, when the loan is restructured and the life of the loan is extended, are you charged further for interest? How does that work?
Now, when the loan is restructured, and based on the question, you would have paid the interest. So when restructure is basically a continuation of the loan, and the interest will apply on the reduced balance at that point going forward from restructuring to the end of the loan. Yes, basically.
Might I add to what Logie said? If we give a 6-month break on payment, but you paid the interest, then all that happens is the loan gets pushed back by 6 months. So the maturity date is extended by 6 months only. It means now you can continue with your normal payment. The loan will get paid down as originally designed, and all that happens is your loan matures 6 months later than what was set up initially. So that scenario is probably one of the easiest ones that we can conceive of.
Okay. How soon can a customer expect a response if they send an email to COVID Care or back to respond to the emails that were sent? How soon can they expect to hear from us?
In fact, we have responded quite a bit already at this stage. It's a daily process. We do it on a daily process now. We try to do so within 24 hours. Oh, sorry, 2 working days, sorry. So we have gotten a lot and we have responded. We have made the changes in our system, effected them and so on, and we are doing quite well at this time. So persons who haven't gotten or haven't received a response from us, please contact your officer, who will, within the next 24 hours, send that email to you or come in to see that customer so he or she can effect the moratorium.
So it's 2 business days.
2
we will
business
be able
days.
to contact them.
Yes.
Okay. Thank you. All right. Is there any points? Just talk again about who is likely eligible for postponement of loan payments. Let's just touch on that again so that people know generally the industries that are affected and can come in or send in their application for a loan moratorium.
Okay, to reiterate, anybody who has suffered loss of income, loss or reduction in income as a result of COVID-19 is eligible. If you did not suffer loss of income, but in your household there is loss, so that you now have to pull a bigger strain, it means you are indirectly affected, and that qualifies you also. Anyone who suffered loss or reduction in income as a result of COVID qualifies for this program.
So may I add on here that everyone includes individuals as well as businesses.
Okay.
And from all indications, every sector of the economy has been affected. So one way or the other, so whilst someone may be employed in government and has that income, the spouse may be employed with the hotel industry or airline industry, something of that sort, or probably self-employed and has lost income. So therefore, he or she will qualify, or the family will qualify, let's say that way.
How can persons overseas apply? Is it the same way through the email?
Well, we have sent email to every customer who has an email address, right? And in fact, we have received calls from persons in the diaspora indicating the willingness to accept the moratorium, and others said they're okay in the meantime, so they'll wait and see. So those persons who have not received email, probably because we don't have the email address, or we have the email address is inaccurate, we urge them to contact the bank, contact the officer who will speak to them and send that letter to them in the event that they qualify or they need it.
Okay, this is good. All right, we're going to wrap up in about 5 minutes. Gentlemen, if there's anything else you want to add or you want to repeat for the benefit of our viewers and listeners, you can do so now.
I would say that these are extenuating circumstances. We are really into the unknown now. We don't know how long this crisis is going to go on for. What we do know is that the effects are very devastating. People are hurting, families are suffering, people have been laid off, and anxiety levels have risen. There's always hope. What we're doing tonight is giving a little bit of hope to people that at least you don't have to worry about your obligations to the bank, so that you can put more of your energies into doing other things to take care of your families. Having said that, though, it is a time for reflection. It is a time for doing things differently. It is a time for re-examining the household budget. And I would really encourage people to sit down as a family now and to look at what is urgent, what is absolutely necessary, versus what would be a nice to have. and redo your budget based on the reduced income that you now have. Involve the entire family so that persons know what is going on in the family, and so there wouldn't be any undue pressure put on you as parents by maybe children, for example, who are used to getting what they ask for. And families need to now practice some sound decision-making skills, some sound shopping skills. People have to get used to sacrificing in the home, doing away with things that you were accustomed to. What you would want to do now is to look at your fixed expenses in the homes, things that you must take care of, maybe rent and that kind of thing. And then with the discretionary income that you have left over, then looking to do with it those things that are necessary first and foremost before you do anything else. It is also a good time to start thinking about being self-sufficient. Planting a garden. Everybody in Grenada is blessed with some good soil around the house, and you don't need plenty soil to do anything. So if you can do these things, you will be adding to your income by being able to produce, for example, fresh fruits and vegetables on your own, and then you wouldn't have to buy that from the supermarket. So it is a time for re-examining family budget.
Okay, before we go to Gary, we have another call on the line. This is the final call for tonight. And all WhatsApp text messages that were raised that didn't really relate to tonight's discussion will be responded to it will be responded to tomorrow or on Monday. All right, so we'll take this last call. Good evening, caller. Go ahead.
Hello?
Hello.
Hi, good evening.
Go ahead.
Yes, I would like to thank the bank for being very proactive and being on the ball in this COVID time. Actually, I was contacted maybe almost 2 weeks with a letter offering the moratorium. I deal with other financial institutions, and up to this point, I have not heard anything from some of them. So I would really like to thank the bank. I think you all are on the ball and offering a very good service. It was a very informative program tonight. Thank you.
Thank you, caller. We appreciate that. Okay, I'm sorry. We have one last caller from overseas. We'll take that call. Good evening, caller. Please go ahead. Welcome. Caller, are you there?
Hello?
Are you there, caller?
Hello?
Are you hearing us?
Yeah.
Can you go ahead with your question?
Hello? Yes, I'm hearing you. I have a question that I would like to ask, right?
Go ahead.
Okay. It might not be related to this matter, but it was that a matter like was related a while ago that I had. I wanted to borrow $13,000 from the bank, right? Okay? Which I had the money in the bank, but I wanted to borrow money in the bank, okay? Mm-hmm. And borrowing the money in the bank, it told me that I had to put up the $13,000 in order to borrow $13,000, right? And then the bank turned around to charge me interest on top of that $13,000, okay? So what I wanted to know is, when you deposit money in the bank, right, is that the asset of the bank or that is a liability to the bank?
Thank you.
And when borrowing money, what commodity or what asset does the bank really put up in order to lend people money? Or is it just the bank doing fracking and just created money out of thin air and borrowing people? Because I had to put up my own asset to borrow assets from the bank and to charge interest. So why is that?
Thank you for your question, caller.
Thank you, caller, for that question. And of course, when you put your money in our bank, we give you interest, and we give you the assurance that whenever you want your money, you can get it. It's not owned by the bank, your monies is a liability to us, and we have to ensure that we are in a position to give you that money when you want it. Now, the matter of your of the loan that you requested, and in the banks, because we lend out customer money, customers like yourself, we have to ensure that at the end of the day, the borrowers pay back the customers' money. And hence, in banking, what the practice is that we ask our borrowers to present some form of security, such that just in case you do not pay the loan, we have to put our hands on something such that, and essentially it's depositors' money that we are lending out, and we have to repay our depositors. So hence we ask for what we call security on those loans. So to reiterate, the monies that you put in a bank with us is not ours, it's yours, so it's a liability to the bank. We guarantee you that we'll give you that money when you ask for it. We also give you interest on it. Hence the reason why when we lend it out to other persons, we ask for some form of security such that we secure and have the depositors' money intact. I hope that clarify and explain it well.
Thank you, Mr. Logie. Okay, so we've closed the phone line for the night. So, Gary, is there anything that you wanted to add as we wrap up?
Well, Mr. Moses said quite a bit, but I must say at Core Bank, we care deeply about our customers, and we know the anxiety they are going through now during these turbulent times. But we want to assure you that we are here to assist you in whatever way we can, and however we will also like for you to make the sacrifices that need to be made so that you can get out of the turbulence and so on. We are prepared to further help persons, because there are persons now who are employed, who may be employed for the next 2-3 months. But in the event that you suffer loss or reduce income, please feel free to come in, talk to our officers, and we're going to provide you assistance. Additionally, there are persons who may not qualify for the moratorium, but may have other use, may need a loan, may need funds to do something else. Feel free to come into us and apply for a loan, and we're going to facilitate you to assist you in that regard. So that's it for me.
Thank you, Gary. Mr. Logie?
So to extend a point Mr. C has made, we are a locally owned and controlled institution. We are locally managed, and so we understand the situation better than anyone else, what you're going through. So particularly, I implore for business customers, please contact your relationship manager, arrange for a meeting. We can sit down and discuss your needs, and we're in a position to advise as to what's the best option for you in this time. As indicated earlier in the discussion, a full moratorium may not necessarily be in the best interest for you, because you're simply kicking down the bucket lower down, in the sense that you still have to pay that loan, you have to pay the interest. So we are a caring institution, and because we are a caring institution, because we are local, we think we understand you best, and we come in and call, make an appointment, and we can discuss the situation and advise you accordingly.
Okay, thank you. As we close, we just want to thank each and every viewer and listener on tonight's program. We thought it was pertinent to bring this program to you so that we could explain better what we're really talking about with a loan payment postponement. We want to thank our partners also who would have streamed this live on their platforms as well. We thank BFM for streaming it on radio, and GIS for also bringing it on their Facebook page. We thank George Grant also, who has partnered with us tonight. So as we close, we would like to wish everyone a good night, and we look forward to discussing with you the loan moratorium. I hope everybody understands it better now, and all of your questions that you needed to be answered were indeed answered. So we wish you all a good night, and God bless.